There's been a lot of activity in the healthcare REIT sector, and with the nationwide health property sale to Ventas, and last year the split off from Sun Health of the REIT Sabra Healthcare. And I have with me Rick Matros, the CEO of Sabra Healthcare REIT. And Rick, the last time we sat down together, you were the CEO of Sun Healthcare. Now you're the CEO of Sabra REIT, which basically now owns all the real estate of Sun. A lot has changed between then and now. How do you like the view for the industry from your new seat?
Well, I love being where we are, just given our size relative to the larger REITs. And it's funny because our thesis had been that the REITs had gotten so big that we could appeal to the small to mid-sized guys. And given our operating background, that would be appealing as well. And that was before all these big deals. So
right.
I think that makes our thesis even more valid.
And as Sun's landlord, you must be pretty ecstatic about what has happened with the RUGS 4 implementation and the increase in Medicare-related cash flow. Do you think this is having a dramatic impact on skilled nursing valuations in general, or just the big companies?
I think it's impacting a little. I think the bigger impact really has to do with the prices that have been paid for Medicare and for Genesis. So there's a little bit, I think, from RUGS 4, but as reality starts hitting relative to Medicaid rates, I think the primary effect of RUGS 4 will be to offset the negativity of Medicaid, because RUGS 4 is so much better than everybody expected it to be.
But will it, I mean, it's always been the debate in Washington. Some people don't like it to offset it. When they recalibrate it, do you think they will recalibrate it with the problems with Medicaid in mind?
No, they won't, because it's a bifurcated system and they look at it separately, and they look at everything in silos in Washington, and that was the problem that we had with RUGS 4. RUGS 3 with the 9 categories back in '06 actually did save the system money, but there's a budget crisis and they look at everything in silos, and if any sector is spending more than they projected, they're going to make the adjustment. That's what's going to happen with RUGS 4 at some point as well.
And obviously Sabra wants to grow, and you have enough cash in your balance sheet and lines of credit availability for immediate acquisitions. Are you seeing good product out there that you want to buy?
Yeah, we are. We have, on our earnings call last week, we noted that we have about $400 million in the pipeline, which at this early stage in our development is a pretty good pipeline. Sure. And it's a nice mix, about 68% SNFs, and the rest primarily senior housing, some hospitals. So we're getting a nice mix of assets because we want to broaden our base beyond SNFs.
I was going to ask you that. I mean, you want to go into the assisted living senior housing area? Because that's not something that you personally have been in very much.
Yeah, I've always, I guess, dabbled in it. I've always had some component of it in the companies that I've run. But I like the senior housing sector as well, and I always like to mitigate risk and spread things out a little bit. Mm-hmm. Whether it was at the other companies with different product lines that we had and different businesses, so the same thing here.
And do you have a preference for small to medium-sized portfolios when you're looking at deals, or are you pursuing more of the onesie-twosies?
Our preference would be portfolios of 3 to 7 buildings. But we are looking at 1s and 2s. We're not going to discount those, because given our starting point, anything's going to help our earnings growth, which is kind of an advantage we have. We don't have to do bigger deals. It takes as long to execute on the small ones as it does the mid-sized ones, but we'll take a look at everything, and that's what we're doing.
Okay. And we all know that the large healthcare REITs are having absolutely no problem raising capital in the market. If Sabra was to find a particularly large acquisition, given that you're relatively new as a public company, would you be able to raise the capital for let's say, to almost double your size?
Yeah, in fact, I don't think that we would even need to have a large acquisition to do it. I think as we go through our existing liquidity and we start running through, say, 120 to 150 million, we'll be able to go out and raise equity to replenish the revolver just on the strength of our pipeline and based on the deals that we'd already executed. So I think the market would support that. If we happen to have a large deal in hand, then that would even probably be a little bit easier.
Mm-hmm. And right now in the market, I mean, in my 25 years in the industry, I don't think I've seen this kind of investor interest in healthcare REITs, for the obvious reasons that they all did very well during the big recession that we are in theory out of. But do you see that, one, do you see that continuing? And two, do you see either more consolidation among the healthcare REITs, or do you see more IPOs of people forming new healthcare REITs to take advantage of the investor interest right now?
Well, one, I think that the interest will continue because it wasn't just about doing well through the recession, but if you go back to the early part of the decade, the REITs did real well through the SNF bankruptcies as well. So I think that's another piece of it. And then beyond that, my sense is that for the first time, some of the REITs that have never really focused on SNFs are getting more comfortable with the SNF business. And so I think that will tend to keep things going as well. In terms of additional consolidation or what other guys are going to do, I think there's going to continue to be a monetizing of real estate, but I don't see companies doing what we did. It looks like they're more along the lines of doing sale leasebacks or, in the senior housing sector, TRS structures. I'll be surprised if anybody in the skilled business does a TRS structure with nursing homes.
Not because the nursing home guy wouldn't want to, because the REIT wouldn't want that risk.
Yeah, I just don't see why you would do that. I mean, the liability risk is
right.
Huge. It changes the whole cost equation.
Gotcha. Yeah, no, that's definitely true. And we all know that the RUGS 4 impact that went into effect October 1st last year, that's benefited, because we can see the results, the public companies. Are you, as an acquirer out there, are you seeing the small companies or the individual owners? Is there fallout from them that they just are, fed up with all these changes in reimbursement, as particularly Medicare, and they want out?
There's a little bit, and actually not to do with RUGS 4 yet, although I think that'll happen. We're seeing more distressed properties than we've seen in a while. But the challenge there from a REIT perspective is you want to do accretive deals, and you can take a look at that distressed property, particularly with an operating background. You can see it getting to be a good operation. But are you able to sort of take the hit until it gets there? Yeah. So that's a bit problematic. But I think what's really going to create fallout is really the combination of the complexity of RUGS 4 and what's happening with Medicaid rates. So many of the smaller providers were much more Medicaid dependent than the large guys, and you've had 2 years already, depending on what state you're in, of say flat rates. And now it's going to be best case flat in some cases. As you know, in a few states they're talking about some pretty draconian cuts. So I just think you're going to see more guys throwing the towel.
Okay. And what do you think, if you had to look forward the next year or two, what's going to be the biggest obstacle for Sabra's growth in terms of, maybe keeping you from growing how much you want to grow? What would prevent that? And
I don't mean to sound overly optimistic, but I don't really see any obstacles out there. I think there's a lot of product out there. There's enough product out there that we're seeing that we're able to be patient and selective. And, I guess I just don't really see that changing over the next couple of years.
Okay. How about for the senior care industry in general?
No, I think the independent living sector maybe have it the toughest. Because so much of the independent living sector is tied to the housing industry. And so I think one of the questions is, by the time seniors actually can sell their homes, are they even going to qualify for independent living anymore? There are already occupancy problems there, or they just go straight to assisted living. I think what assisted living facilities have to be really careful about is, as the acuity in nursing homes has increased, the acuity in assisted living has increased, and they're trying to operate in a way that allows people to age in place. And so they're contracting out for all these supplemental services, rehab, hospice, home health, to keep people in assisted living. And there's a fine line there. I just think they need to be really careful.
Yeah, no, I know a lot of people have been worried about that. Well, with your pipeline, I hope in the next 12 months or so you're going to give me a lot to write about.
I hope so too. Because everybody keeps calling us uninteresting right now.
Well, thanks for sitting down with me.
All right, thanks, Steve. Appreciate it.